All right, let's talk about one of the most common and honestly one of the most confusing features you'll see in the annuity world, the roll-up rate. You've probably seen the ads, right? They promise these big, attractive numbers, like 7% or 8% guaranteed growth for your retirement. It sounds amazing. But what's actually going on behind the scenes? How does it really work? Let's pull back the curtain and break it all down. Okay, so first things first, we need a solid, clear definition. What exactly is a roll-up rate? Now, if you only remember one thing from this whole explainer, please make it this. The roll-up rate grows your income base. It does not grow your cash value. Think of the income base as a special, separate number. Its only job is to figure out how big your retirement paycheck will be later on. It is absolutely not the amount of money you could withdraw as a lump sum. That's a huge, huge distinction. I know. Income base sounds a little abstract and weird. So the best way to get it is to just walk through a simple example of how it all works in the real world. So let's set this stage. Imagine you put $100,000 into an annuity. This one has a feature, an income rider, with a 7% roll-up rate, and that's guaranteed for 10 years. Your plan is to just let it sit and grow for that entire decade before you need to start taking income from it. Simple enough. Okay, so you fast forward 10 years. That 7% guaranteed compounding growth has been doing its thing the whole time. And now your special number, your income base, has grown to nearly $200,000. That looks fantastic on paper, right? And it is. But this is where we have to be crystal clear about what that number actually is. This is the key takeaway, that $196,000 is not a lump sum you can cash out. You can't just walk away with it. The best way to think of it is as a phantom number. It's a powerful tool the insurance company uses for the very next and most important step. So here's where it all comes together. The insurance company takes that big income-based number and applies a payout percentage to it. Let's say it's 5% in this example. That calculation is what determines your actual spendable retirement paycheck. In this case, it's about $9,835 a year, guaranteed for the rest of your life. The roll-up rate's only job was to build a bigger foundation to make that guaranteed paycheck higher. So now that we know how it works, you have to ask, is it a good deal? Well, like pretty much any financial tool, it's got its upsides and its downsides. Let's take a balanced look. On the pro side, you get guaranteed growth on that income base, which makes planning for your future incredibly predictable, and it happens no matter what the stock market does. But on the con side, and this is a big one, it's not a lump sum. It only applies to your future income. Also, these features usually aren't free. They come with an annual fee, and that guaranteed growth rate often has a time limit, like 10 or 20 years. This leads us right to the most practical question of all. When you look at those pros and cons, is this feature actually right for you and your goals? A roll-up feature can make a ton of sense if you fit this profile. You're in your 50s or early 60s, and you're planning to retire in the next 5 to 10 years. Your biggest goal is to create a predictable, guaranteed paycheck you can't outlive. Basically, you value that certainty more than you value taking on market risk with this chunk of your money. On the other hand, you might want to skip this if you think you'll need flexible access to your money before retirement. Or if you're already retired and you need income to start, like, right now, there's just no time for the roll-up to work its magic. And of course, if you're comfortable managing your own investments for income, you may not need this type of guarantee at all. So you understand what it is, how it works, and who it's generally for. What's the right next step to take if you're going to make a smart decision? It really boils down to this. If you decide this strategy sounds like a good fit for your goals, how in the world do you choose the right product when there are hundreds of them out there? And this is so important. It is not just about shopping for the highest roll-up rate. That high rate can be really misleading. It's totally useless if the company has a low payout percentage or if the annual fees are sky high. You've got to look at the whole picture to see which product will actually deliver the highest guaranteed income for life. Honestly, comparing all those different variables can be overwhelming, and that's exactly where we can help. At the Annuity Expert, our entire job is to run those side-by-side comparisons for you. We'll show you which combination of roll-up rate, payout percentages, and fees will give you the most value. Our services and consultations are always free. You can give us a call at 770-755-1565 or visit our website at annuityexpertadvice.com to learn more and make a truly informed decision.